Stop scrolling, because China just told the United States, take your beef and go home. That's 150,000 tons. Gone. Overnight. No warning, no wiggle room, just rejection. But it's not just meat that's being thrown out. It's leverage. It's alliances. It's $500 million in American livelihood. And while Washington's scrambling, guess who's quietly sliding into the empty chair at the dinner table? Moscow. And they didn't even have to knock. But what made China turn away from the U.S.? And why is Russia the one benefiting the most? According to Reuters, the rejection followed a series of unpublicized inspections at ports in Guangdong and Shanghai, launched just 48 hours after the U.S. expanded tariffs on Chinese electric vehicles. While the official line emphasized health standards, analysts from Rabobank and the Peterson Institute argue the move was retaliatory. You don't reject $500 million worth of beef over a clerical error, said Chad Bown, senior fellow at PIIE. U.S. beef exports to China accounted for $1.28 billion in 2024, up from $957 million the previous year, making this one of the most lucrative and fastest-growing trade lines. Cutting it without prior diplomatic notice signals a strategic pivot rather than a regulatory issue. But why take this risk now, and why aim directly at American agriculture? That's where the story turns. The fallout wasn't just immediate, it was personal. Over $520 million in orders were either canceled or diverted in the last 2 weeks, according to the U.S. Department of Agriculture. Ranchers in Texas, Kansas, and Nebraska, where over 70% of U.S. beef bound for China originates, were left with full inventories and no buyers. In an interview with the Wall Street Journal, Clayton Reese, a Nebraska cattle producer with a $14 million contract in limbo, said, "We prepared shipments for Q2 based on projections from January. Now we're selling at a loss to domestic buyers who won't touch those volumes." The USDA reported wholesale beef prices dropped 7.3% between March 5th and March 18th due to oversupply. American Cattlemen's Association President Ethan Lane told Bloomberg, "China was our growth frontier. Losing them throws years of investment off course, beyond ranchers, downstream industries, feed suppliers, truckers, cold chain logistics, face layoffs. But the blow wasn't random. It was precise and political. The next question isn't just how it happened, but who helped make it happen." The re-escalation of U.S. China trade tensions began in February 2025, when President Trump, in his second term, imposed 25% tariffs on $38 billion worth of Chinese electric vehicles, batteries, and rare earth components, citing national security and unfair competition. Within 72 hours, Beijing responded quietly with a targeted disruption of beef imports, framing it as a quality control issue. According to data from Customs China, rejection rates of U.S. meat products surged by 430% compared to January, signaling a coordinated campaign rather than random enforcement. A Ministry of Commerce spokesperson told Xinhua News, "Imports must meet our safety standards regardless of origin," while state media ran op-eds linking agricultural dependency to geopolitical vulnerability. Trade experts view it differently. This was a chess move. Trump hits their tech. They hit his voter base, said Wendy Cutler, vice president at the Asia Society Policy Institute, in an interview with CNBC. With farm states critical to Trump's re-election strategy, the timing suggests China is using beef as a pressure valve. But while the U.S. is bleeding, another supplier is quietly feasting. Russia's beef exports to China surged 312% year-over-year in the first quarter of 2025, reaching 38,000 tons, more than 5 times 2022's quarterly average, according to China's General Administration of Customs. How did they move this fast? A 2023 bilateral agreement between Moscow and Beijing established a joint veterinary certification system and permitted exports from 40 Russian processing plants previously barred from Chinese markets. In November 2024, a rail corridor connecting Russia's Volgograd region to Xinjiang opened under the Belt and Road Initiative, cutting transport times by 2/3. "This is no accident," said Alexei Kurdyukov, Deputy Minister of Agriculture of Russia, to RIA Novosti. "It's a result of strategic alignment and infrastructure diplomacy. The yuan-ruble bilateral payment system also eliminates dollar risk, a sticking point in U.S. China transactions. Russia didn't just slip in, it was invited through a door left open by American tariffs. But can Moscow truly feed a market as massive and demanding as China?" China consumed 10.6 million tons of beef in 2024, according to OECD FAO Agricultural Outlook, with imports accounting for nearly 25%. The U.S. filled 285,000 tons last year. Russia, even with its rapid growth, is still at just under 15% of that volume. So how is it planning to scale? The Russian government announced a $1.1 billion subsidy package in early 2025 to double meat production by 2027, with specific carve-outs for export-oriented beef farms. 3 new mega feedlots are being constructed in Voronezh and Kursk, each designed to raise over 100,000 head annually. Russia has arable land, labor, and now logistics on its side, said Olga Belikova, trade economist at Moscow State University. Yet there's skepticism over safety standards and cold chain reliability. Beijing appears willing to absorb the risk for geopolitical loyalty. Still, China had other established options. Why pivot so dramatically toward Russia now? Argentina was once China's second largest beef supplier, accounting for 21% of total imports in 2021. But economic instability has undercut its reliability. Since Javier Milei's deregulation agenda in late 2024, inflation has surged past 207% year over year, according to Argentina's INDEC. Export permits have faced delays, and contracts were paused as the peso collapsed, making long-term pricing volatile. Meanwhile, Australia, once a preferred supplier, has struggled to regain Beijing's trust after the 2020 barley and wine dispute. Despite lifting bans on certain Australian beef plants in 2023, China resumed sporadic inspections in February 2025. The trade relationship has thawed but not healed, said Stephen Kirchner, research fellow at the United States Studies Center in Sydney. In January, 3 Australian shipments were rejected for exceeding microbial residue limits, raising fresh doubts. From Beijing's perspective, Russia may offer less consistency in volume, but more alignment in policy and payment. As a result, China is choosing risk it can control over allies it doesn't trust. But were these quality concerns the real drivers, or just cover for something much larger? Argentina's beef exports to China, once dominant at over 515,000 tons in 2020, fell by nearly 32% in 2024, according to Argentina's National Institute of Statistics, largely due to Milei's aggressive peso dollarization reforms that destabilized pricing contracts. In March 2024, China suspended 14 Argentine plants over concerns of foot and mouth disease in Salta province, citing non-compliance with World Organization for Animal Health protocols. Meanwhile, Australia, previously China's largest supplier, has struggled to regain trust after Beijing blocked several plants in 2020 over political tensions. Although bans were partially lifted in late 2023, Bloomberg reported that 3 major Australian shipments were rejected in January 2025 due to excessive antimicrobial residues. Trust has not been fully restored, said Dr. Vivian Wang, a food safety policy analyst at the University of Sydney. China's preference now leans toward suppliers who offer political alignment and sanitary compliance, not just volume. And that preference is turning heads in Moscow. But why is Russian beef, once considered unfit for elite markets, suddenly in Beijing's favor? In the first quarter of 2025, China's imports of Russian beef climbed to 41,000 tons, up from just 9,800 tons during the same period in 2023, per China's General Administration of Customs. The increase wasn't driven by price alone, although Russian beef averaged 12% cheaper than Australian beef this quarter, according to commodity analyst AgFlow. What set Russia apart was its alignment with China's payment infrastructure. Since December 2024, 89% of Russian beef shipments to China have been transacted in yuan or rubles, avoiding the US dollar entirely, per data from the Bank of China. Beijing values predictability over perfection, said Maxim Sokolov, CEO of Russia's agro-export, to TASS. Logistically, Russia's new agricultural rail corridor, operational since November, cut shipping times to China from 28 days by sea to just 11 days by rail. That efficiency, coupled with political alignment, has rebranded Russia not as a fallback supplier, but a strategic partner in Beijing's food security calculus. But this isn't just about beef anymore. It's about a larger geopolitical shift cloaked in agricultural trade. On March 7, 2025, China's Ministry of Commerce imposed new tariffs on 711 U.S. agricultural products, including sorghum, almonds, pork, and dairy, representing $11.6 billion in annual trade. This came just days after the U.S. Trade Representative's office reinstated 301 tariffs on $35 billion in Chinese tech goods. According to the Wall Street Journal, these new agricultural tariffs represent the most comprehensive strike against U.S. farm goods since the 2018 trade war. USDA chief economist Seth Meyer warned that soybean exports alone, worth $14 billion in 2024, could decline by 22% in 2025 if retaliatory barriers persist. This isn't tit for tat, said Alicia Garcia Herrero, chief Asia-Pacific economist at Natixis. It's a long-term decoupling. The tariffs are structured to target red state exports, applying pressure where it politically hurts while avoiding critical inputs like lithium or semiconductors. It's not just economic punishment, it's strategic disruption. But the bigger question now is whether the U.S. is already pricing itself out of China's food future. In 2022, the U.S. held 12.6% of China's imported beef market, generating $1.2 billion in sales. As of Q1 2025, that share has dropped below 6%, according to USDA export data, and with no sign of diplomatic thaw, analysts warn the decline may not be cyclical. It may be structural. Once a supply chain is rerouted through another country with logistics, payment, and certification built in, it's difficult to reverse, said Deborah Elms, Executive Director of the Asian Trade Center, in an interview with CNBC. China's domestic beef production is also rising, up 5.3% in 2024 from the previous year, thanks to state-backed investments in Inner Mongolia and Sichuan. Add to that Russia's expanding footprint, and American exporters now face both political barriers and growing competition. The danger isn't just losing a customer, it's losing market relevance. And the pressure cooker is about to get hotter if Washington doubles down. By late March 2025, the U.S. has announced plans to expand tariffs to an additional $18 billion in Chinese goods, prompting warnings from the World Trade Organization and European Union about escalating global disruption. While the Trump administration defends these tariffs as necessary for strategic protection, data from the U.S. Census Bureau shows agricultural exports to China fell by 27.4% in Q1 alone, despite higher global demand. Retaliatory cycles shrink markets rather than protect them, said Chad Hart, agricultural economist at Iowa State University, in a recent Reuters interview. China, meanwhile, is locking in multi-decade beef contracts with Russia and Kazakhstan and signing yuan-based trade pacts that make dollar-based U.S. beef less attractive by design. If current trends continue, the U.S. could lose permanent access to Asia's fastest-growing protein market. And without an exit ramp, the trade war becomes less about leverage and more about self-inflicted isolation. We're glad you're enjoying this video. Please like and subscribe. Check out another video that is now on your screen.